3, 2, 1, blast off.
All right. Still get the bull in front there.
No bear yet.
No bear yet. I don't know.
For the table.
I haven't looked at the market here in a couple of hours. Who knows?
It could you didn't look at it today? What?
Yeah.
No, that's not possible.
No, not possible. But it's been a couple hours, and who knows? It could have flipped by now. But it has been one crazy week. And I am very suspicious of this move.
Yeah.
And I mean, you got to be in it, right?
Mm-hmm.
It's been a bull trend since the low in June, and you got to be in it, but
you got to be
ready to get out when the signs tell you. Yeah.
I mean, I feel like at least for us, I mean, we're always ready. I've never seen you not ready to get in and get out. You're going to do what the market tells you. Yep. You're just going to be like, wow. I mean, I always think of it like this. I'm like, man, didn't see that coming. But that's exactly the point.
Right.
Like, there's no crystal ball. You're not going to see it coming. All you can do is know the past, anticipate the future, and
wait for it. Yeah,
just do what the market tells you is doing.
I mean, the
trend's up right now.
Yeah, it's up.
But it's no guarantee. And I keep seeing people, they're like, you should be all S. You should be all S. And I'm like, what is telling you that?
I asked somebody that on Facebook.
Oh, yeah. I'm
sure literally, that exact question. I'm like, please tell me
why
the
you're
rationale
saying
of why you put that comment up.
My gut tells me.
Yeah. There's a lot of guts out there.
Oh,
I mean, I'm okay with that. Like, trade however you want. But when the Fed tells you they're going to keep raising rates, the unemployment rate is decreasing. The Fed is trying to create demand destruction, which is absolutely going to result in layoffs. And we're already seeing layoffs. We talked about that last week. It's bizarro world. There's so many things that are going wrong, and the market is rallying on that. And so it'll go for as long as it goes, and it can go all the way back up to the prior high. But to think that somehow this is the beginning of a new bull market that's going to take us to S&P 6,000 or something like. It's insane.
It always happens, Jerry. The market always goes up.
I don't know about we. Maybe my kids will see S&P 6,000. I'm not 100% sure I will, but I'm trying not to jinx myself. But I'm going to see when the SH starts going up, which is the short S&P 500. Anyway, right, so strangely enough, I feel like I wrote this so long ago, but last week somebody was asking about the G Fund. Like, there's been a lot of, and what it comes down to is the new TSP site. It's amazing. The class action lawsuit that's going to come from that is just mind-boggling. But hopefully the 2 move a month and the noon rule get thrown into that mix, because that's the thing. But so now a lot of people are looking at the G Fund, and some people, some of our more analytical spreadsheet kind of peeps are looking at it going, how come, on a day-to-day basis, I'm not getting this infinitesimal move when if this is the formula, I should be getting this. And so I'm like, all right, let me just do kind of a deep dive into the G Fund. Unfortunately, I'm not going to be able to actually answer that question, because they don't give you the exact algorithm of what it is, and it's debatable. They say that it's based on the last day of the prior month, so they only actually calculate it on a monthly basis, but they give you a daily number. So which is it? You know what I mean? So I couldn't figure it out. Is the bottom line. But we're going to go through the whole G Fund thing anyway. Okay. So what is the G Fund? I think there's a lot of misnomer about what it is in general. We'll look at what they do tell us about how it's calculated. My favorite, well, I shouldn't say favorite. I have a lot of, I don't know how the word I want to use to do that, but one of the crazy sort of truths that people believe is I'm losing money to the G Fund because of inflation. I did a Facebook Live about that on Wednesday. And then at the end of the day, all these funds are tools. And so how do we use it as a G Fund as a tool? And then really the one that everybody should be the most concerned about is these challenges, congressional challenges to the G Fund. And we'll take a look at that. All right. So what exactly is it? this is the best kind of synopsis of the G Fund, and it was from back here in 2018 is when they used to issue these notices. They're PDFs, and you could pull them down off the old site, which was 1,000 times better than the new site. So this was from back in 2018. You can see the net expenses were 40 cents per $1,000 in your account. Okay, 4 basis points, super cheap. Rates of return. So here were the rates of return. This is a very simple chart. I can't even actually see it as let me see. Okay, so back to 2009, you got 3%, and that's for the year. And then it went down, and it kind of went up and down a little bit sideways into 2018. But basically between 2 and 3% is the average over the last, whatever that is, 10 plus years. But that was from 2018. And then the key features, okay, because we're going to go over a bunch of these later in the thing. G-Fund offers the opportunity to earn rates of interest similar to those of U.S. government notes and bonds. So notes and bonds are the longer time frame treasury paper, okay, but without any of the risk of loss of principal and very little volatility of earnings. The objective of the G-Fund is to maintain a higher return than inflation, okay? The objective of the G-Fund is to maintain a higher return than inflation without exposing the fund to risks of default or changes in market prices. So the G-Fund, this is how they do it. They invest in short-term treasuries that are specifically issued to TSP. So you can't go buy these treasuries outside of TSP, okay? Payment of principal and interest is guaranteed by the U.S. government, right? So that's what we always talk about when we say by law, that you can't have a negative quarter by law. That's what that is. That it's the government is guaranteeing that you're going to get paid out in the G Fund. Interest rate resets monthly and is based on a weighted average yield of all outstanding treasury notes and bonds with 4 or more years to maturity. So we're not talking about 6 month, 1 year, like not the short term paper. It's the longer term notes and bonds. But so that's what the rate is based on, right? But you get to move in and out of the G Fund every day. So if you bought, a 3 month note or bill, 3 month treasury bill, you're giving the government your money for 3 months. You still, and you're getting almost nothing for it. And you're giving it to them for 3 months. So we can move our money every day in and out of the G Fund, and we're getting a rate that is more like a long-term bond fund. Okay, earnings consist entirely of interest income on the securities. That's one we're going to get to a little bit later, but the G Fund is basically a bond. So if the face value of the bond is $100, and you get a 10%, rate of return, you're getting $10 a year as interest on that bond, right? The rate of return you get goes up and down, but the $100 doesn't move. You're going to get that $100 back. That's how a bond works. So the interest, so the rate increase that you see in your account because you're in the G Fund is a function of the interest rate, not a function of the underlying value of the G Fund going up and down. And then interest on the G Fund securities has over time outpaced inflation and 90-day T-bills, right? That they're saying it in there a whole bunch of different ways. It's designed to outperform inflation. Does it always? No. We're going to take a look at a chart on that. All right. This is the old way they talked about it in 2018. This is the new way, and it's not great. Admin expenses are a little bit more, right? Now it's 0.43. So it's 4.3 basis points instead of 4. So it's a little bit more expensive. Admin goes up, inflation. So the G Fund, they explain it a little bit different way. G Fund is invested in short-term treasury securities, especially issued to TSP. There's no credit risk. Although securities in the G Fund earn a long-term interest rate, the board's investment in the G Fund is redeemable on any business day with no risk to principal, which I don't know how you would even understand that. But of course it has no risk to principal because it's a bond. The bond face value of the bond is $100. You're never gonna eat into the principal of a bond. So there's no risk to principal. The value of G fund securities does not fluctuate. Only the interest rate changes. And that's what we were talking about, right? The interest rate can go up and down, and that's where you get you don't get losses. You just get fewer gains. G fund. This is what we're going to talk about at the end. The G fund yield advantage. I don't know if that's some new thing you can tell that new people, financial people, have a hand in creating this thing, but apparently they made this thing, it gave it a name, the G fund yield advantage. The G fund rate calculation results in a long-term rate being earned on short-term securities. That's really the bottom line. Because long-term interest rates are generally, right, not always, generally higher than short-term rates, G fund securities usually earn a higher rate of return than do short-term marketable securities. Right now, we are in an environment where the yield curve is inverted. So if you look at, if you go to Yahoo Finance and you look at different bond prices, people are paying more for shorter term bonds than they are for longer term bonds. Okay, it's inverted almost always, and it makes sense, right? If I'm going to loan you $1,000, if I'm going to loan it to you for a week, I might charge you $1, right? If I'm going to loan it to you for 30 years, I'm going to need a little bit more to cover the the risk and all the other things. So usually longer term bonds are yield a higher rate of return. When they talk about yield inversion, that's what that is. People are more worried about what's going to happen down the road than they are near term, and it flips, the yield curve flips. So right now, the G fund is not, because the rate on the G fund is longer term bonds. Now shorter term bonds are actually yielding higher than longer term bonds. So anyway, unless you're a serious geek about this stuff, you probably eyes just rolled over in the back of your head. All right. So this is kind of off the main page of tsp.gov. Why should I invest in the G fund? Okay. The payment of G fund principal and interest is guaranteed by the U.S. government. This means the U.S. government will always make the required payments. That's like a third grader wrote that, and it is absolutely meaningless. This means the U.S. government will always make the required payments. Like, does that mean? I don't know what that means. I put it up there almost as a joke. Why should I invest? That's not why you should invest in it, because the government will always make the required payments. I'm going to get to the inflation one in a little bit. And the next tab here was, how can I use the G fund in my TSP, right? Consider investing in the G fund if you would like to have all or a portion of your TSP account completely protected from loss. Okay, that is 100% true. Completely protected from principal loss. If you choose to invest in the G fund, you are placing a higher priority on the stability and preservation of your money than on the opportunity to potentially achieve greater long-term growth in your account through investment in other TSP funds. And we all talk about that, right? The G fund, ordinarily, when the market's going up, the G fund does not go up as much as the stock funds do. That's why you don't want to be in the G fund when the stock market's going up. But if you're retired, if you don't want to worry about any of this stuff, the G fund you're completely protected from loss. All right. So how's it calculated? I did a whole bunch of looking around, and really this is the best I could find. This is an old Fed Smith article. G fund interest represents the weighted average yield of all outstanding Treasury notes and bonds with 4 or more years to maturity. Okay, so they're longer term bonds that we can move in and out of every day in the G fund. Although the G fund reports a daily share price, the interest rate is calculated monthly based on the last day of the previous month. So while the interest rate is calculated monthly, TSP does publish daily share prices. So again, I don't understand if it's calculated, unless they just take the prior month's price and divide it by 30 and put that number out every day. I don't understand what the point is. And so I don't really know how to answer the question that originated this thing on Facebook, which was, why is there a fluctuation, like a daily fluctuation in my G fund? I think I should be getting this and I'm not getting it.
Right. Because we don't see behind the curtain to what algorithm they're using there.
Right. I mean, I got as far into the algorithm as I could get. And actually this one came off of FedSmith. This one was off the TSP site. G fund rate is calculated by the U.S. Treasury as a weighted average yield of approximately 181 U.S. Treasury, approximately 181. Like, tell us what the number is.
Yeah.
I mean, approximately is dumb because you're the TSP. You know what the actual number is.
Yeah, but it probably changes every month. So they probably change the quantity of the securities, right? And not only change the quantity, but they probably change what they are, right? So maybe there's 175 one month, and they're this makeup, and then next month it's 182.
Could very well be. Yeah. This is as far behind the curtain as
and they're not going to let us know.
Yeah.
There's no transparency. There's not going to be.
No.
But that does answer the question. It's just that you couldn't give them the full answer because it's not available. Yeah. But the answer is you can't know. You're not going to figure it out.
No.
Yeah.
You're not going to figure it out.
Yeah.
And it's bad because what that means is you have to trust them. And at this point in the game, the trust value is
always
awful
been
low.
that way, though. I mean, most people, I don't think most people, I don't think that everybody necessarily trusts this. I don't want to say the system, but the TSP and the way all this stuff works. But it's not just the TSP. There's a lot of financial products out there. Yeah, I'm trying to think of the right word. Like, like there's lots of, we run into this, when we're trying to set up a 401k for our company or, all these different things. As soon as you dig under the hood, you realize there's a lot of gray area and there's a lot of kind of ish and a lot of approximately and, because they're not going to give you the full, because a lot of times they don't even know.
Right. Well, we're talking to sales guys about that, but they don't know.
But as far as the TSP goes, it's not surprising to me because first of all, they don't want you to be able to figure it out because if you figure out something's wrong, we're going to be able to,
come back and show it. And
exactly.
Class action lawsuit, and as if that's not going to happen anyway.
Yeah.
Okay. So on to one of my pet peeves, let's call it. I'm losing money to inflation in the G fund. Okay. What does the TSP say about that? The new TSP site says, okay, the G fund is subject to the possibility that your investment will not grow enough to offset the reduction in purchasing power that results from inflation. So they are acknowledging that it's possible that your investment in the G fund will not grow enough to offset inflation. At least they're acknowledging that, okay? But back to the 2018 one, we said the objective of the G fund is to maintain a higher return than inflation. Okay, that is the goal. So if that's the goal, I think we should just sort of take the question off the table. I mean, a goal doesn't mean it's going to be 100% effective. It means that's the objective. That's what they're trying to do for us. Is if your money's in the G fund, they're trying to ensure that it's going to grow more than the rate of inflation. Does that always happen? No, it does not. Here's a chart of the 10-year Treasury yields back to like 1960. Okay, the 10. So there is no chart of the G fund, but the 10-year, because as we said the G fund is some kind of average of 4-year and greater notes and bonds. So a 10-year is an approximate, right? Because it goes out to 30 years and comes down to 4 years. So let's say 10 years is a pretty good approximation. And here's the consumer price index, which is the inflation index, right? So the vast majority of the time, right, when the blue line is above the red line, which it is most of the time, the G fund is beating the rate of inflation. Okay? It's not always. We have spikes here in the 70s where inflation was huge, and for a year or two in there, the G fund definitely did not beat inflation. But for the vast majority of the time since 1960, the G fund beat inflation. Okay. This is off the TSP site. Okay, so this is the G fund in red this time, and inflation is in gray or whatever. So obviously they're saying since the inception of TSP in 1987, the G fund has clearly outperformed inflation. Okay, if you look really close here in this, at the end here, since 2021 to 2022, you can see that inflation is ticking up, and the G fund is ticking up, but it's nowhere near going up at the same rate that inflation is. So right now, is the G fund beating inflation? No, it's definitely not beating inflation right now. But historically, it has. Okay. The objective is to ensure preservation of capital and generate returns above those of short-term Treasury securities. This is the average annual return, since as of July 2022, the 10-year is, almost 2%, and it goes down from there as you get shorter in duration, because ever since our high up here in 1980, the interest rate, 10-year rate, has gone down, collapsed in the last 40 years. So, yeah, over time, the G fund rate has gone down, but so has inflation. All right. Another way of looking at that is if you compare it to the G and the L fund, right? Year to date, the L income fund, which is the most secure, L fund you can get, is down almost 3%. And the G fund is up 1.4%. So, and lifetime I thought was kind of interesting. G fund outpaced L fund, the L income fund, right? This is not the L 2060 fund or whatever. This is the L income fund. But the G fund alone outpaced it. So all that to say, I'm not a huge fan of the G fund, only to use it as a tool under certain circumstances. But to bash it and say I would never use the G fund for any reason whatsoever is just ignorance. So at the end of the day, what's the point? Using the G fund as a tool, okay? We don't have a whole lot of tools to use in TSP, but if you're trying to avoid these things, the G fund is absolutely your best way to do it. We don't have a way to bet, to make gains when the market goes down. We can do it in the mutual fund window, but we cannot do it in the core TSP. So if you're trying to avoid these losses, forget about making gains while this is going on, but avoid these losses, the G fund is the place you're going to do it. And of course, the way you do it is you connect the bottoms, and when the trend changes, you move to the G fund. If you've watched the show at all, you understand what we're doing. Okay. This is probably something like a foot stomper. It's for retirees especially. So I've been tracking this here for quite a while, at least back before 2019, because it was before Trump that I can't remember if it was Bush Jr. administration. Somebody, maybe it was Bush Jr. Somebody was talking about this. So will the government ever get rid of the free lunch, right, quote unquote free lunch of the TSPG fund? Okay. They say there's no such thing as a free lunch, but in the TSP there is a free lunch, and it's called the G fund. Will the government ever get rid of this free lunch? Okay. And this is in miccareer.org, whatever that is, but it's the point of it is it's out in the public that the G fund is a much better deal than what anybody outside of the government can get in terms of a money market. So the G fund free lunch. What's the free lunch? You can read about it here on this page, but the G fund interest rate calculation is based on the weighted average yield of outstanding Treasury notes and bonds with 4 or more years to maturity. As a result, participants who invest in the G fund are rewarded with a long-term bond rate on what is essentially a short-term security. Generally, long-term interest rates are higher than short-term rates. Nobody gets this. Nobody else is rewarded, quote unquote rewarded, and given the ability to have the flexibility with their money, but still get long-term rates. So it's not like Jim Cramer's talking about it on CNBC, but it is out there in the public sphere. Okay, and here's where it gets actually kind of important to us because it's in Government Exec magazine. Okay, and it happens. It seems to happen. Well, as far as I can tell, it only happens during Republican administrations. But White House budget plan praises the TSP, then cuts it. Okay. Plan to change TSP fund returns would make fresh retirees invested in the L income fund run out of savings 8 years earlier, right? I don't really need to, I'm not going to read this whole thing to you guys, but the idea, officials with the TSP and advocates for federal employees and retirees say that overall Trump's budget would significantly impair workers' ability to save for retirement at a critical time. The plan also proposes reducing the statutory mandated rate of return. We talked about by law you can't have a negative quarter, right? Plan reduces the statutory mandated rate of return of government securities G fund to be based on either the 3 or 4 week Treasury bill, or at a projected savings of $10 billion or $9 billion over 10 years. So what they're talking about doing is taking away the quote unquote reward of a longer term bond fund and pegging the G fund to a 3-month or a 4-week Treasury bill. That would about cut the rate of the G fund in half. Okay, actually, I think it says it down here somewhere. So yeah, Kim Weaver, she's still the spokesman for TSP. So back whenever they did that, this was a 2018 article. The G fund was returning back then 2.75%. We would have disastrous effects on participants' ability to save for retirement. If Congress changed the G fund to track the 3-month Treasury bill, yield would decrease to 1.46%, and the 4-week would drop to 1.43%. So you're pretty close to cutting the rate of return on the G fund in half if you peg it to what these guys are talking about. And it's always, they're trying to save money. And so in my mind, and if I am a retiree now, but I wasn't when I was at first looking at this, but if you have a lot of money at TSP and you have it in the G fund because you know you're not going to lose any principal, and you're living off that rate of return in the G fund, and they decide to repeg it to something else, they easily could wipe out half your cash flow. Your
ability to continue your cash flow.
Yeah. So, G fund is a really interesting rabbit hole if you choose to go down it. Hopefully that gave you guys a little bit of a taste. But again, it's a tool. All right. So the TSP Fund Charts, it's been a crazy week. I pulled these charts on the 11th, which is Thursday morning, so who knows what's going to happen by the end of the week. But generally speaking, the market took off like a rocket this week. We got an inflation number that was lower than last month, and everybody thinks that now the Fed's going to stop raising rates at such a high pace. I'm not so sure that's the case, but that's what the market thinks is happening right now. And I don't really care why, but as a result, we are now above that 20-week moving average line. Could we get something like this? It's possible, but most of the time, once you get above that line, you're staying there for a while. We're also above 50 now on the RSI on a weekly basis. So in terms of the technical analysis, there isn't a better time to get back into the stock funds. Does that mean if you buy it here at 42.36, it can't come down to 4,100? That's a pretty big percentage loss, but it could come down to 4,100, hit that blue line and still stay above it and keep on going. And that's what is going to happen. Over time, it'll be up here, it'll come down, test it, keep moving higher, test it. That's just the way it works. We're looking at weekly charts, not daily charts. S Fund, same thing, another huge week for the S Fund. Cleared that 20-week moving average line for the first time since it closed below it back here in November last year. iFund, iFund's not in as good a shape. I mean, this pattern alone still doesn't look good, and we're still below 50 on the RSI. So it's getting there, and technically it looks like it is going to close technically above that 20-week moving average line. But if I was pressed, I would stay with the CNS versus the I. And then the F fund, we've been talking about this. The F fund is a whole lot of churning in here, and a lot of it has to do with whether or not the Fed does, in fact, or how long the Fed continues to raise rates, and does something break in the meantime. And there's a lot of betting going on in both directions, which is why there's a lot of churning at that resistance level right there, the 20-week moving average line. But we almost hit that 50 line on the upside and got pushed back down a couple of weeks ago. So F fund is definitely still a question mark. Speaking of question marks.
Questions.
Yeah. So if you want to know, I mean, obviously at the beginning of it, we talked about it, and a lot of you guys probably already know, we definitely got back into the stock funds this week. We look at the weekly charts, and I look at, intraday charts to make decisions about when I'm going to reallocate. So if you're a subscriber to the site, you got the alerts, you understand why I did what I did. If you're not a subscriber to the site, sign up at growmytsp.com, and
you'll get some insight.
Yeah, so what happens
a lot of analysis and a lot of help in figuring out how to do this on your own, which is our goal, is to teach you guys how to do this on your own so you can actively manage your TSP account. And the good thing is like, and we don't talk about this enough, but you learn how to actively manage any account.
Oh, yeah.
Right? Basically, what we're showing you is you could use this in an IRA, 401k, TSP. You can manage your spouse's 401k, whatever. And, and a brokerage account. I mean, these things all kind of fit in together.
Yep. It's a skill set. It's not an answer to a problem. It's teaching a skill set.
Right. If you have any questions, make sure to put them in the comment section wherever you found the video. If there is an comment section, you can always email us at support@growmytsp.com.
Awesome.
All right, almost said growmytsp.gov.
No.
Not that one. That's not a website. It's definitely not ours. All right, guys, have a great week, and we will see you soon.
Out of here.